And in our top business story, house prices in Dubai have moved into a positive trajectory for the first time in 2 years. That's according to a new report by property consultancy firm Core Savills. According to the new findings, Dubai's residential sales market witnessed a 1% marginal quarter-on-quarter growth in the 3 months to June, after 7 consecutive quarterly declines. Transaction volumes also picked up during the period and were 5% higher than in the first 3 months of the year. The chief executive of the firm was, however, quoted as saying that it is too soon to cite this as a revival in the market, especially as sales activity in the third quarter is likely to be weaker due to the slower summer months. It was added that transactions are expected to gain momentum again throughout Q4 this year and into 2017, providing that there are no external shocks affecting the market sentiment. In terms of areas, the Springs and the Meadows were the top performing villa districts, reporting a 3% increase in prices on the first quarter, although they remain 7% lower than in the same period last year. Jumeirah Village was the weakest villa district. Prices dropped by 5% quarter-on-quarter and are down 17% year-on-year. In terms of apartments, the only district to witness a sales price rise was Discovery Gardens, which was up 4% on the first 3 months. Again, apartment prices in Jumeirah Village were down by 5%. Flydubai has reported total revenue of 2,302 million dirhams for the first half of 2016, up 5.4% compared to the same period last year. The low-cost airline also reported that losses of 89.9 million dirhams were 39% lower than in H1 last year. The carrier added through a statement that passenger numbers rose to 4.9 million, up 16.5%, while the number of business class passengers carried per departure saw an increase of 19%. Gaith Al-Gaith, the CEO of Flydubai, was quoted saying that the airline's network continues to mature, offering passengers enhanced connectivity. Looking ahead to the second half of the year, they have started to receive the first deliveries of 111 aircraft placed in 2013, with a total of 8 aircraft scheduled to join the fleet between May and December. He added that the results have shown the same trend as last year and that they expect a stronger second half. Dubai International Financial Centre has announced the successful results of its first half 2016 operating review. According to Emirates news agency WAM, the DIFC was ranked number 1 in the Middle East and Africa region earlier this year and number 13 globally in the Global Financial Centres Index. It also reached another milestone of crossing over 1,500 firms, with 1,539 companies now based in the centre. 143 new companies joined the DIFC in the first half of the year alone, representing a 16% growth on this time last year. The active firms in the centre are now made up of a record 425 financial services entities. That's an increase of 11% on the same period last year. 914 non-financial firms, a 22% increase, and 192 retailers, a 2% increase, taking a further 81,300 square foot of leased space. Occupancy rates remain extremely high, representing the ongoing demand for DIFC space. And in retail, the new Gate Avenue at the DIFC project will significantly increase the size of the centre's retail portfolio. And the names of the most successful real estate companies in the Middle East region have been revealed, as Forbes Middle East recognised the top firms in the industry for the region. At an award ceremony held at the Waldorf Astoria on the Palm Jumeirah, Forbes Middle East presented the awards to recognise the achievements and contributions made by firms towards the development of their cities. Describing the industry as the most innovative and prosperous, representatives said that the industry has continued to show resilience towards the current economic challenges, and therefore it was the right time to recognise their efforts. The companies were assessed on their revenue, market value, assets and profits. It was revealed that the ranking system for the awards was based on the top 50 publicly listed companies, the top 35 private real estate companies, the top 10 consultants, as well as the top 5 international consultants that have operated in the region. From the listed companies, UAE construction giant MR Properties came out on top with both the largest asset base of 21.7 billion US dollars, as well as the highest amount of revenue at 3.7 billion US dollars. MR tied with Damac Properties for profit earnings of 1.2 billion US dollars. Among the top companies based in the UAE that were recognized included the Shaikani Group, who recently launched a mega project in Jumeirah Village Circle, as well as Shown Properties, known for their 1.6 million square foot business park in Dubai South.
The real estate sector in its own right is a fundamental contributor to the economy of the city of Dubai, but also it is a complementary sector to some of the other strategic sectors such as tourism. Tourism benefits from real estate benefits from tourism. So Nakheel, in the three sectors that I mentioned, are all in the real estate sector.
What we have seen from last 20 years or so, that Dubai has given us an opportunity, because Dubai itself is a country of opportunities. What the vision of His Highness Sheikh Mohammed is, that he has provided you a vision of 2020. And it's not a vision of 2020 only, it's a long-term vision provided by him, because he's developing Dubai on a very good pace. If you look at 10 years back, what was Dubai? And look at now. So we are moving with Dubai, we are growing with Dubai. As Dubai is growing, we are growing. Our portfolio is 1.5. We have launched projects of 1.5 billion dirhams. That is 30,000 units we have delivered. Not in Dubai, it's including Pakistan as well. Now we have launched our vision of 2025 worth of 2 billion dirham, in which we will launch 3 projects in Jumeirah Village, 1 project in Arjan, and we are in talks with a huge 800 to 1,000 villas project in Dubai South.
We are part of the real estate market of UAE, and we are trying always to go along with the market trend and to attend to the demand and to supply something new that is on demand as well in the market, such as a new hotel apartment projects. We are starting soon this sector, which will meet the local market demand.